Hello and a warm welcome to Personal Finance. I'm Gugulethu Cele. Well, today we're going to tackle the issue of life insurance, more importantly as to how it applies to South African consumers and the various options that are available to you. Now, to unpack this and so much more for us this evening, I'm joined by Victor Gouveia, who's the Business Distribution Manager at ABSA Life. Good to have you with us this evening, Victor.
Hi, Gugu. Great to be here. Thank you very much.
Fantastic. Maybe if you can give us just a quick reminder of the importance of life insurance, especially in the South African context, where I think sometimes it gets lost in translation versus your funeral cover and other types of insurance.
Okay. So, Gugu, I think life insurance in particular is important, specifically when one relates it to debt. So why I say it's important is normally people take out a life cover policy for purposes of a legacy. So they want to leave money for their children, for education, etc., etc. Whereas credit life in particular, people want to take out the cover to protect themselves in the event of death, disability, possibly retrenchment. And what that does is, if something happens to you, your debt is then paid off. And that for me is kind of the key difference, I suppose. And also, if you look at it from a traditional perspective, credit life cover doesn't necessitate underwriting or physical examinations or blood tests.
Tell us a little bit more about that, because credit life cover has also been in the spotlight for the wrong reasons of late, where some financial institutions have given it to consumers at very exorbitant rates, or unbeknownst to the consumer that they're actually paying for this cover. Are we seeing the landscape changing when it comes to regulations with regard to credit life insurance? Absolutely,
Google. I think one of the things we are seeing, both from a Financial Services Board perspective and from a National Treasury perspective, we are seeing definite movements to a space where consumers are better protected. So they are looking at better disclosures. They are definitely looking at a product that suits the customer's needs, because what we have seen from the regulators is that there are products offered to clients where they cannot benefit from the product itself. So let me give you an example. So you'll have a self-employed individual who takes out credit life and he can't benefit from the retrenchment part of it, because as a self-employed individual, you can't retrench yourself.
Yeah.
You see, so what the regulator is trying to achieve is to tailor-make products for the consumer involved. So what they're pushing for is a situation where the insurance provider offers the client a product that they can benefit from, and also offers the client a product that is reasonably priced, as you say. So there's definitely moves towards capping the price of credit life cover.
Is it optional, or do consumers also need to make use of it, like you say, to ensure that their debt can be paid should any unforeseen circumstances occur?
Sure. So it depends on the credit provider. What we have seen is a lot of credit providers make it a condition of grant, meaning if you get given a loan, you have to take out some form of life cover. However, in the National Credit Act, it does make allowance for a substitution, meaning if you have another cover or another policy, you are entitled to bring that policy to them and use that rather than purchasing their product. So it is allowed. You can make it conditional. It's not compulsory in the true sense. You can make it conditional. In the ABSA Life context, we've not made it compulsory purely because we want customers to have the freedom of choice, and we want customers to be aware of what they're buying, and obviously if they don't think they need it, then they don't have to take it.
And on that though, are they allowed to get additional quotes perhaps? So if I take out a loan with ABSA, do I need to get credit life insurance with ABSA, or are there other alternatives on the market?
There are definitely. You know, there are obviously, most financial services providers or lenders have their own in-house service, but there are large companies out there that offer a standalone credit life product. There are various forms of the product. You can take one that just covers you for death. There's also versions that will cover you for additional items, critical illness, you know, retrenchment and so on. And also, you know, you don't necessarily have to take out credit life on its own. You know, there's also the option of looking at your current life cover, having a word with your advisor and say to him, look, I have taken out debt recently. It's affecting my my current financial position. Let's have a look at reviewing that and possibly giving me an increased cover amount.
Let's sidestep now and go back to the initial part of the conversation, which deals with life insurance, and you did highlight certain aspects of it, but it's recently come to the fore where we've had the Financial Services Board as well coming forward and saying that there are lots and lots of individuals who have not claimed the funds that they have in life insurance. But I understand ABSA has made inroads with regard to this in trying to track some individuals down. How have you done so?
So Gugu, what we did is we, in partnership with the bank, because we obviously have a bank assurance model where we work very closely with ABSA, so we've got in excess of 9 million customers. So what we did in collaboration with the bank and in collaboration with the Department of Home Affairs, we looked at the deceased base, and we said, where we find a deceased customer that also had a policy with us, have they claimed? Because what we find is it could be a situation where there's no family, or the family are not aware of the fact that there was in fact a policy in place. So what we did is we went through that process, and where there was a policy in place and where we found that the client was in fact deceased, we paid those claims out. And when the claim was paid, it was paid at date of event. So if the event was 2 years ago, we would have taken the balance outstanding 2 years ago and paid that amount.
Oh, without any interest accrued?
Yeah, that's kind of the process that we follow.
With that though, hasn't it been tricky to track down individuals, especially those who might come forward with fraudulent claims then?
I think it has been. In some situations it has been, but fortunately, again, this is where the bank's power comes into the equation, because they've got a track and trace capability that they use for you know, looking for people who owe them money, basically. And it's not unique to the bank. It's an industry, you know, it's a widely used industry service, and when you take out a loan, you're also required to give the bank your next of kin details, and usually we're able to contact the client via next of kin or a relative or a friend. So we were quite successful. And where we weren't successful, you know, we then placed adverts to see if we can track the clients down.
And do you also welcome individuals who might come forward and say, look, I might have had a relative who had this particular cover with you or had a loan with you, and then take investigations forward from there?
Absolutely. And again, this is where the power of the bank comes into it, because we use the bank's distribution footprint to facilitate that. They can either contact us via the branch network, or they can contact us directly.
Maybe if we can come back to merging the two again, like you said, life insurance and credit life, the two do certainly go hand in hand, or you can look at which options work best for a consumer. But upon death, if an individual does have credit life insurance, has debts to pay out, but maybe the credit life cover exceeds the amount of debt, what happens in that particular scenario? So
generally, most credit life policies pay the outstanding amount. You do, however, like you said, get policies that pay a set amount. So it's a sum assured value. Let's say you've got an overdraft as an example, and you only owe 2,000 Rand on the overdraft. The policy, let's say, is for 10,000. We will pay the full 10,000 out. So what happens in that scenario is the 2,000 goes towards settling your debt, and the balance goes towards your estate.
Ah, fantastic.
So that's basically what happens in that scenario.
Indeed. Well, Victor, let's wrap it up now by getting a quick overview of the key important factors for consumers to remember tonight. Victor, your closing remarks as to what consumers need to remember from this conversation? So
I think, Gugu, key things for me for consumers are, firstly, they have the option and they have a choice. They don't have to take what is presented to them. So if they've got an alternative, they're welcome to bring that to the party, if I can say that. Customers must read what they're purchasing. When a quote is presented to them, they must please read whatever's presented to them with the loan agreement, so that they fully understand what is that they've purchased and also what they cannot claim for. And then thirdly, what I would deeply suggest for clients is also let one of your family members know that you've got a policy. So that when something happens to you, you at least have a relative that knows about this, and that you don't lose out on a benefit that you've been paying for. Indeed. Victor, thank you so much for your insightful analysis. I take it to the viewers watching at home as well. Be sure to get some advice or speak to the individuals at the financial institutions where you do take out credit life or even life insurance from, or extending your loans. But a big thank you once more to Victor Gouveia, who is the Business Distribution Manager at ABSA Life, for joining us this evening. Be sure to get in touch with us and share your views with us at CNBC Africa using the hashtag Finance410, or to myself at Gugulethu on Twitter. Until next time, it's goodbye for now.